It's a very strong market. Rates are below 3%. That can't last forever, but we think it can last through 2021. We know, though, this is a cyclical business. There's going to be a bust if there's a boom. It's just a matter of when. We don't think it'll happen soon.
Hi guys, Christian here. In today's video, you're going to hear from Glenn Kelman, CEO of Redfin, one of the largest publicly traded tech real estate brokerages there is. If you don't know the story of Redfin, it started off as a platform in 2004 to eliminate real estate agents and create a cheaper, faster, easier way to transact real estate. Glenn had a bad experience when he was purchasing a home. What he's found out in the past 15 plus years is that there's almost no way on God's green earth that people are going to buy or sell a house without using a real estate agent. Why? Well, real estate agents basically boycotted anything that Redfin was related to, so that in the early days, Redfin advertised their listings. They were only able to get buyers who weren't represented by a real estate agent because Redfin was not offering a commission. Since no buyer's agents would come into a property, Redfin basically had to sell the home themselves, and they hemorrhaged cash for many, many years, but they were based in Silicon Valley, and that's the perfect path for any business model when it comes to tech, right? So Glenn pivoted his company in 2010 and they became a real estate brokerage focused in several large cities, and their revenues increased significantly. They went public in 2017 and now have a market cap of over $2 billion. So the moral of the story is, if you can't beat those pesky real estate agents, join them. Go public, have yourself a $2 billion payday. So what are some of Glenn's insights on the current real estate market? Let's find out. But before we do, make sure to smash that like button for the YouTube algorithm.
Let's bring in Redfin CEO Glenn Kelman. Glenn, great to see you as always. Thanks for joining us.
Great to be here.
I mean, one has to ask the question, if Toll Brothers CEO is saying the best housing market for 30 years, is it overheated a little bit?
It's a very strong market. Rates are below 3%. That can't last forever, but we think it can last through 2021. We know, though, this is a cyclical business. There's going to be a bust if there's a boom. It's just a matter of when. We don't think it'll happen soon.
Are you starting to see signs of a slowdown now that we're in a different phase of this pandemic? Cases are rising, restrictions are rising. Is it changing inventories or buying? No?
No, every week I think it can't get crazier. It gets crazier. And if we see people get more comfortable letting others into their home, we're going to see more inventory on the market, and that's what will drive sales volume. Today, we are definitely inventory constrained. There aren't enough homes for people to buy. They're going crazy trying to get in the door. And so if sellers can just get comfortable putting more properties on the market, people definitely want to move. That would be a situation where lots of people want to be able to work in different places, live in different places, and finally the inventory has met demand.
Glenn, when we talk about some of the differences to 05, 06, 07 type period, at least are we seeing bigger deposits, better loan to value type ratios?
Certainly, credit standards are much tighter than they were. What's driving this boom is true demand, that people want to live elsewhere. There's less speculation. There's less predatory lending. This isn't just a finance-fueled boom. It is driven by a true change in consumer behavior where people want to go to Montana or at least Sacramento or Tucson rather than living in the major urban centers.
That's what I was going to ask you. We did a segment earlier, Glenn, about how companies are rethinking their own footprints. Goldman Sachs Asset Management adding jobs in Florida. Just the latest after Hewlett-Packard Enterprise goes to Texas from California. You think they're following where their employees are moving? How do you see this trend playing out?
Well, it's a dynamic where the companies follow the employees follow the companies. 5-10 years ago, there were people who wanted to live in more affordable metropolitan areas, but they couldn't find a job there. Now the employees leave and then the companies follow, and that drives more employees to places like Texas, Florida, the rest of the Sand Belt.
And in terms of, Glenn, what maybe things at the margin are pivoting back a little bit, are we seeing any of the big cities that might have seen plateaus or falls in prices for the last year or so start to come back at all, and which cities in particular?
There are some cities that are coming back slightly, but mostly you're seeing a massive outflow. So migration from New York and Los Angeles is up 50% year over year. Inbound traffic to Sacramento and Las Vegas is up 70% year over year. The cities that depended on massive amounts of corporate taxes and high net worth individuals paying taxes are losing their tax base. it is going to be a long 5-10 years for major coastal cities. And I'm not sure what we ought to do about it. The federal government probably needs to step in at some point and help with the infrastructure of those cities because they're not going to be able to do it on their own.
Wow, that's quite a dire prediction. Finally, Glenn, with all this red hot demand, what's happening with pricing? And how much are people going to be willing to pay up?
Pricing is really strong. I think the only thing that's hard to figure out is if there's just no seasonality to demand, because honestly, we saw strong demand through Thanksgiving. We see it very strong in December when usually people are thinking about Christmas. It may be that people have nothing better to do than look for a home to buy. So we're trying to figure out if demand is really strong given the season or if seasonality just doesn't matter at all. But prices have been going up about 15% year on year. You can't imagine that happening for more than a year, just because at some point, even more affordable places become unaffordable.
So how did you like Glenn's analysis of the current market? Leave a comment down below on what your thoughts are. Is this real estate market going to continue to inflate like the bubble that it is? Will the Fed quit injecting stimulus and lowering interest rates artificially in order to prop up this market? Why is there any propping up that needs to happen? It's already such an entirely huge bubble. I don't know how people cannot see this, but anyway, I look forward to your thoughts and analysis, and I'll see you next time.